In the month of February, we've seen the market go from bullish to bearish to bullish to bearish and sometimes be stuck in between. These markets cause a lot of confusion and a lot of losses. Now, in these situations, it can be often difficult to find the appropriate trade and understand when the trend is confirmed. In today's session, we're going to be talking about one of our key elements in the STX option pricing model, which is the level 2 concept. Now, this level 2, whenever it hits either direction, it confirms the trend. So using this theory in itself, as a trader, we are well aware that the bias is going to be on one direction compared to the other. Having this information is a game changer, because not only do you know which side the trend is confirmed, but you also know that whenever you see a dip, it's either a buying opportunity, or whenever you see a dip, you're not going to get shaken out. Of course, the news always changes things, and we're going to be explaining in certain circumstances where the level 2 theory can be voided if there is a change in the news by looking at the stock arm. But overall, this level 2, from our data that we collected, works 80 to 90% of the time on confirming the trend for different type of stocks, assuming that there's no news. Now, in today's session, we've seen the S&P 500 explode at first and start to become very choppy. A lot of people, especially in my Discord, that were giving their own opinions on things, seem to get a lot of bearish vibes, because we saw that when Trump was speaking, that it caused a lot of uncertainty in the market, and a lot of people felt the need to get bearish. And this was also evident in the Finwid community. So let's go over the details and let's discuss how the STX option pricing model works. So these inflection points that we provide every morning to our team are not just any sort of support or resistance levels. They actually have a meaning to them. And the meaning behind each of those levels can be found in the STX model definitions over here. Okay, so level 1 is the gatekeeping level. This could be bullish or bearish. Now, this level is vital to understand here. Essentially, how it works is that when I find these inflection points, I try to understand the behavior of different option traders. So as option traders, we know that there's two sides of the table. There's option buyers, the people that buy calls and puts. This could be your regular retail traders that buy either one side of the market, and their max risk is basically the amount of investment that they put in. So if they lose that, then that goes to zero, but they don't lose any more, but their gains can be unlimited. For people that write premiums, this could be option traders, this could be the retail investors, and this could also be major institutions and funds that write these premiums. They get a guaranteed rate of return, but their losses can be infinite. With this inflection points that we designed in our model, we basically assess what the behavior of that particular market maker is going to be when that level hits. So for example, when we hit our level 1 bearish or bullish, that is a point where the option premium is elevated, where the demand zone to write, means sell options either on a call or a put, is in high demand. And this is very interesting tell, because when the premiums become so elevated, you often see massive reversals at this zone. So in the case of level 1, for example, the best example I can give you here is MSTR. So when MSTR hit our level 1 bearish at 315, it's seen a massive, or it's seen a pop off this, and it started to chop and continue chop in our neutral range. Another example of this is Snow, which hit close to our level 1 bearish at 177 and 94. This is not just any sort of support or resistance zone. It's a zone that poses an area where the inflection point is the inflection point is based on the premium, and when the option gets over here, writing puts at this situation becomes the demand zone for the market maker. And even including in something like Netflix, for example, you see that here it was off by a couple of points, but you can see that there's a lot of writers. So at first you see that it hit over here, it bounced, and then it bounced over here again as well, moving forward. And what we had did with our Netflix play today, so we noticed that it hit level 2 bullish on this day over here, and based on this here hitting the level 2, this trend has been confirmed. So in this situation, how the decision is impacted is that, let's just say a market maker has wrote 1040 calls and they wrote 1 million contracts. So if they write 1 million contracts, their losses could be infinite. And if there's news or market strength, whatever happens, so what happens in this situation, and the reason why the trend gets confirmed, is the market maker unloads those contracts, meaning that they cover on those contracts. Instead of having a $1 million of outstanding contracts, they cut them in half. That becomes 500,000, and that causes a short-term dip. When that short-term dip happens, that gives us an opportunity to jump into calls. Okay, so at this particular point, we want to get calls, and we definitely did that, and that gives you the opportunity to play the upside here. So the example that we can discuss here was in the channel where we purchased those Netflix calls. Okay, so the Netflix had to do with that level 2 scenario where we got right there, and that play was definitely a banger for the room. So let's see if we can find that real quick, because there's a perfect example of how that can work. Okay, so we bought Netflix next week calls at 4.45 because of this specific reason. So while we were looking into that Netflix here for next week, we also noticed that the premiums were also very good, right? So you always want to make sure that the premiums are optimal. So when it hit this level 1 bullish, we got in at that particular point because it was advantage for us. The premiums are cheaper. You know, rule with option trading is you never buy the high of the day premium. So we got in at that particular point, and I mentioned right over here that the reason we got into Netflix calls because they can retest level 1 after hitting level 2, which confirms the 10. And I said we will retest that 1040 again. So the trend has been confirmed, and you see it fully breaking out at this particular point. So that's an instant 100% trade here. And if you guys look at the trade in itself right over here, so if you go to the Netflix 21st, the 1060 calls, they closed at around 7 and they had a high day around 8. Okay, so that was an awesome trade in the room today, and you can see that for yourself. Okay, besides all that here, looking at the premium and the setup is perfect. Now, situations where you see the level 2 not work is for stock like ARM. So ARM, we actually did have puts on because it did confirm the trend, and it was pretty much moving lower. As the market was going higher, this was moving lower. But then news broke out that ARM had some sort of strategic relationship with Meta, and this stock just absolutely crushed our 150 puts that we had. We only played small on it, by the way, but it went up nuts, and that's one of the key reasons where the news nulls those that level 2 situation. Another example of level 2 here is through Nvidia. So you can see here multiple attempts where it kind of sits around this level 2 here. The trend to the upside has been confirmed. You look at another stock like Apple as well. So Apple is another example where it hit our level 2. So after hitting our level 2 on a Tuesday, it's seen a decline back to level 1, gives you an opportunity to jump back in. And we played this as well, and eventually it rocketed all the way up to beyond our 240 zone. Okay, but you know, a lot of the times this happens where sometimes it can get a little bit above, but it always tries to come back lower. Tesla is also another example. It hit our level 2. We played puts there. Boom, it crashed, and it went slightly below our estimated weekly low. We bought calls here, sold it up here, but it ended up running to this level 1 bearish retest here as well. So Tesla made a solid comeback moving forward. So as you guys can see here, the market presents a lot of opportunities when you know about the level 2. Now these are based off the weekly levels here. On our daily levels, which is available in our war room, we give the confirmation when the trend has been confirmed. So in today's session, we mentioned that when SPX gets above 60.70, that's where the bullish gamma is. We also gave the insight on today saying that we believe it's going to be choppy for the most session, and that if the SPX goes outside of our trading gamma zones, so our gamma zone market's bullish above 67, market is bearish below 60.30. So I said that if we get above that, then most likely you're going to either see 61.10 or you're going to see the bottom of 59.90. Okay, so this here pretty much confirms it. But what you see right over here is when we hit that 60.89 level 2 bullish, the trend was confirmed right over here. Okay, this is where we banked another 100% plus on our SPX. Okay, so if you guys were watching our Twitter feed, we often call those plays, and we got another 100% on those on those SPX plays, and it was a lot of ups and downs in that particular play. But we told people that do not be concerned because the level 2 confirms the trend, unless if Trump said something that would deter the market another way. We knew that there was nothing to really worry about today. So when it hit this level 2, we seen my option on the 6100 call lose 50% of its value, but I didn't get shaken out because I know level 2 bullish confirms the trend. And once it started to really break out, it started to go. The thing about Trump here is that, you know, there was a statement saying that the tariffs already got delayed, but after that statement was made, you start to see a decline here because the market was assuming that Trump may say something different, and then eventually, you know, he reassured it, and then the market just really absolutely started to move, and it slightly moved higher than where we'd expect it to go. But regardless, we played SPX 2 times, banked on it very successfully. The room was very successful today, just like yesterday, and this level 2 system is a game changer. So if you guys want to include it into your trading strategy, join our mentorship program, because not only do people in the room bank off all these trades here, I also gave a lot of free trades to the free Discord as well, with all these SPX plays that all hit, including SPY. Okay, so we give A+ setups that are very successful, and a lot of the time they're based off this level 2. We also managed to call out CRWD, which was an awesome trade. You can see here, once it hit our level 2, trend confirmed, and then it started to really explode through multiple bullish breakout zones. So this was another great trade that we definitely called out, and something that I really like to share with you guys moving forward. So thank you guys once again for tuning in. If you guys want to join our free Discord, the link is below. If you guys want to join our mentorship program, there's a 50% promo code at this time. Take it while it lasts. Thank you for tuning in, and like always, let's get that money.